This is Optimal Finance Daily, episode 2574. What is portfolio rebalancing and how to do it? By Sharkey with thecollegeinvestor.com. And I'm your host and personal finance enthusiast, Diana Merriam. Let's jump right into our next post and start optimizing your life. What is portfolio rebalancing and how to do it? By Sharkey with thecollegeinvestor.com. If you're a savvy investor, you may have taken the time up front to determine the appropriate asset allocation for your portfolio based on your risk tolerance and financial goals. But portfolio rebalancing is a critical part of maintaining an investment mix that aligns with your values. If you're wondering what portfolio rebalancing is and why it matters, you aren't alone. Many investors overlook this component of building an investment portfolio that serves their interests for the long term. Let's take a closer look at what it means to rebalance a portfolio and how it can impact your risk and returns. What is portfolio rebalancing? When you first hear the term portfolio rebalancing, you may conjure up an image of an intricate financial balancing act, and that assumption is not too far from reality. Portfolio rebalancing is the act of reorganizing your asset allocation as your portfolio grows. Although it would be ideal if your portfolio could rebalance on its own, that's not a possibility without the help of a robo-advisor or target date fund. Example of portfolio rebalancing. Let's say you determine that your ideal investment portfolio consists of the following: 50% large cap stocks, 20% international stocks, 15% REITs, and 15% intermediate bonds. It can be tempting to set up your portfolio and forget about it, but market fluctuations will inevitably throw your ideal asset allocation out of whack. For example, imagine that over the next year, large cap stocks significantly outperform bonds. You may glance at your portfolio 12 months from now to find that it consists of the following: 60% large cap stocks, 20% international stocks, 15% REITs, and 5% intermediate bonds. At this point, you'll need to take the time to rebalance your portfolio by selling some of your large cap stocks and buying more intermediate bonds. Otherwise, your investments will continue to become more aggressive and riskier than you had originally planned. Unfortunately, it can be all too easy to forget about rebalancing for years. When you finally realize what's happening, you may find that your investment trajectory is dramatically off course. Why should you rebalance your portfolio? It may help to think of rebalancing as a choice made to stay on the course you've set for yourself. If you never rebalance your portfolio, you may be steering into uncharted territory as if you were a driver that decided to throw out the map while on a cross-country road trip. And more often than not, that uncharted territory is going to involve a bumpier ride due to a higher concentration of stocks. Over the long run, stocks should outperform bonds, which means that your portfolio will naturally become more weighted towards equities over time. However, stocks are also much more volatile than bonds. So if you don't keep consistently rebalancing your allocation of stocks and bonds back to your target, you may find yourself suddenly dealing with much larger up and down swings in your portfolio. Portfolio rebalancing becomes even more important the closer you get to retirement. At 25, you can probably deal with a bigger dip in your portfolio than you'd like. But if you'll need to withdraw your cash soon, you definitely want your mix of stocks and bonds to stay on target to avoid huge balance fluctuations from year to year. How to rebalance your portfolio. Rebalancing is a key part of building an investment portfolio that lasts. As you move forward, there are 3 different options that could work for your situation. Take the time to decide which option will work best for you and set up a system to regularly rebalance your portfolio. DIY rebalancing. It can feel a bit daunting, but it's absolutely possible to rebalance your portfolio by yourself. If you choose to rebalance your portfolio yourself, Excel and Empower, formerly Personal Capital, are a few tools that can really help out. You'll need to check in with your portfolio at least once a year to ensure that your portfolio stays on track. It's important to note that a DIY portfolio rebalance can be a somewhat tedious process. This is especially true if you have multiple investment accounts. Robo-advisors. A robo-advisor can make the process of rebalancing a breeze. With the right robo-advisor, you can skip the process of sorting through your investments. Instead, you can set up a plan that provides parameters for your ideal asset allocation. With that information, a robo-advisor can follow through on the details for you. Want to take advantage of this easier rebalancing opportunity? Here are a few of the best robo-advisors that can help you out. Betterment. You'll have access to human advisors when you choose to work with Betterment. M1 Finance. As our #1 robo-advisor for DIY investors, you can let this app handle rebalancing your portfolio for you. And Wealthfront. If you have a high net worth, Wealthfront could be your best robo-advisor option. These are just 3 of our favorite robo-advisors. If you want to rebalance regularly without the hassle, then take some time to find the best robo-advisor for your situation. Target date funds. If you want the best of both worlds, then target date funds could be the right solution for your rebalancing needs. Although you won't be working with a robo-advisor, you won't have to dive into the nitty-gritty details of buying and selling assets either. A target date fund is based on your expected retirement date. Essentially, the fund will rebalance itself to match the appropriate risk for your age. This can provide a happy medium for investors that are comfortable investing in mutual funds. Final thoughts. Rebalancing is an important component of building an investment strategy that is successful in the long term. Take some time to consider your options to consistently rebalance your portfolio and choose a strategy that aligns best with your investment preferences. You just listened to the post titled, "What is Portfolio Rebalancing and How to Do It?" by Sharkey with thecollegeinvestor.com.
If you use Mint to track your expenses, you've probably heard the news that they're shutting down. But I've got better news, and you've got options. Monarch is the top-rated all-in-one personal finance app. It gives you a comprehensive view of all of your accounts, investments, transactions, cash flow, net worth, and more. Plus, create custom budgets, track progress towards financial goals, and collaborate with your partner. And now listeners of this show will get an extended 30-day free trial when you go to monarchmoney.com/OFD. I moved from Mint to Monarch earlier this year in an effort to better manage finances with my Midwestern gentleman. I really like that we each have separate logins, as it enhances our ability to have full transparency with each other. After trying out Monarch for myself, I understand why it's the top-rated personal finance app. So go to monarchmoney.com/OFD and get an extended 30-day free trial. That's monarchmoney.com/OFD for your extended 30-day free trial.
In full transparency, rebalancing isn't something I do myself because I have a 100% stock allocation. This works for me because I have a long time horizon and a strong cash position, so volatility doesn't bother me much. Also, because I don't have to rebalance regularly, I'm able to set it and forget it when it comes to my investments. But I've read about some interesting ways to simplify rebalancing. For example, you can avoid the transaction fees and taxable events of selling your positions during accumulation by simply redirecting new money that you're investing. Another thing to consider with rebalancing is managing this across a mix of tax-advantaged and regular brokerage accounts. Author J.L. Collins cautions with the following, quote, "This can be cumbersome and you'll just have to work with what you have. While it's best to hold bonds in tax-advantaged accounts, it does complicate rebalancing. First, you should be considering all of your investments as a whole when figuring out your allocation. Next, as a rule, it's better to buy and sell in tax-advantaged accounts to avoid creating taxable events, unless you happen to have capital losses in a given year. Then it's best to take them in your taxable accounts when possible. For instance, you might own VTSAX in both an IRA and in a taxable account. Should you need to sell to rebalance that year, sell in the taxable account to capture the loss. You can deduct it against any other gain you happen to have, including any capital gain distributions. You can also deduct up to $3,000 against your earned income. Any loss left over, you can carry forward to use in future years." End quote. That brings us to the end for today, though. Thanks so much for listening all the way through, and I'll catch you tomorrow on our next episode, where your optimal life awaits.